Greetings, everyone. Welcome back to the Fintech stage for the third part and the last part of the day. Today, at the last part, we're going to have 4 keynotes on different topics. And now, I would like to invite to join us digitally Deniss Fiļipovs, Head of Payment System Policy Division from the Bank of Latvia, with a keynote, The Evolution of Money and Digital Euro.
Thank you, Emils. Great. Thanks for having me, and my sincere apologies for not being able to be with you on site. Well, yes, as Emils has already introduced me, my name is Deniss Fiļipovs. I'm a central banker with 10 years of experience in payments, working with topics starting from SEPA, SWIFT, instant payments, related issues, open banking, PSD2, and indeed crypto, stable coins, blockchain, and last but not least is central bank digital currency. So the latter has become a very important topic on central bankers' agenda. And therefore, I will go through to explain why it is happening and when we can expect digital euro in our pockets, sorry, no, not pockets, wallets. Well, first of all, this is to remind you what we know about central bank money. So central bank money, there are 2 forms, but most popular one and well known is cash. Cash is a legal tender. That means that you take cash and go to any point of sale and it will be accepted. Cash is a low risk since it's guaranteed by the central bank. And well, in case of bank insolvency, its participation in the payment system will be terminated, cards will not work, and actually you will not be guaranteed an access to your money anymore. So in the case of the central bank, this risk is eliminated. Cash also provides high degree of privacy, and as we know, in the case of cash, this high level of privacy equals high level of anonymity. You can use cash offline, that's absolutely normal thing, and when we use cash, it costs us nothing as a user. And just to compare with central bank digital currency, what we know and the definition available to us is rather short. So we know that it's digital, and here it's important to emphasize that it's born digital and not digitized. It's again denominated in national currency. So here we have parity principle, so 1-to-1. And it's still a liability of the central bank. But so around the globe, there are so many different pilots, and we can see that many important aspects remain optional. Bahamas, cent dollar, Cambodia, China, Swedish krona, and many other. It's absolutely not defined, and is DLT and blockchain a prerequisite for CBDC? Should it be programmable, and to what extent? Should it cover only retail or maybe wholesale field and domain? Should it work only for P2P, or maybe it should be acceptable at a physical point of sale or only in e-commerce? And also there are some ideas, should it be integrated with national eID schemes? Because in that way, central bank digital currency can benefit us even more. But yeah, so in fact, it's clear that we are moving towards new concept, but what is the motivation behind? And here I have put 3 main threats from the central banker's perspective. I would call them threats. It's not a secret that cash plays quite a substantial role in our monetary policy transmission and activities, and to ensure financial stability. Therefore, decrease in cash it brings additional risks, and therefore, with the central bank digital currency, central bankers are looking how to mitigate this particular risk. Second is geopolitical instrument, because we already see that some countries may see central bank digital currency as an instrument how to strengthen their global role, and some other may see it as an instrument how to protect their sovereignty. Therefore, first runners will have competitive advantage, and others, I would say, that will hurry up just to avoid lagging behind. Last, third here, but for sure not least, and some time ago it was most important one, and also I could make fair confession here, that you can also say that it's fear and a nightmare for a central banker if private company, tech giant, comes with 3 billion users, comes with its own crypto, so nobody wants to imagine what it can mean and what it can bring to the traditional financial system. So we are looking for the ways how to boost this competitiveness of central bank money. There are also some other features we just consider as a potential benefit. So central bank digital currency can, as an alternative payment method, can facilitate our operational resilience. If cards are not working, so you can use CBDC or cash indeed. The hot topic is also cross-border payments, how to make them more efficient and faster. And again, here we can see that CBDC has a potential to improve safety and efficiency of cross-border payments. To some extent, also, it can help combat money laundering and terrorism financing, but it needs a certain level of traceability. And this is a controversial topic here. For countries who have financial inclusion issue, central bank digital currency can easier access to money and help to solve this issue and facilitate financial inclusion. Last but not least, and my favorite one, is that we are moving towards truly digital economy, the economy of the Internet of Things, and therefore we need fully digital and programmable money for this economy of the future. What types of central bank digital currency we can expect? I have already mentioned them briefly. So CBDC can be wholesale, focused only on big stakeholders, market players, for big banks to improve their cross-border liquidity transfers, or for security settlement systems to improve and deliver efficient cash-like settlement. But what we would be interested more in having retail CBDC, so central bank digital currency available to almost everyone. Probably the most simple way how to deliver it would be to open everyone an account within the central bank. But from another angle, it could be also too disruptive for traditional financial system. You can imagine what it would mean for commercial banks. So risk of bank runs will be extremely high, and quite naturally there could be a discussion why central bank is not taking over other services and products from commercial banks. So what form or what type of CBDC we are actually like to have is a bearer CBDC, also called token money, stored on a payment device or smartphone or plastic card, whatever you want. Actually, this central bank digital currency is a form of token, can deliver also certain level of privacy, and could be most appropriate feature form of CBDC. Again, we have observed centralized models for distribution of CBDC, decentralized models for distribution. But in all those cases, currently, I can say that they are more or less rely on existing cash distribution models, and therefore banks are expected to stay in the game. Well, if central bank delivers alternative form of central bank money, so digital cash, will it beat usual cash? And here I have listed again a couple of motivations and features, but they doesn't really matter if there is no network effect achieved with CBDC. Because if you take any form of money, go to the shop, to the point of sale, if it's not accepted, well, actually nobody cares about your motivation or benefits it's may deliver to you. So central bank is not a startup. We cannot fail, and therefore we have a list of challenges or great expectations we need to address in order to achieve that the new form of money delivered is accepted and is widely used. And here the first prerequisite is legal tender. A mandatory requirement for that. Should we make CBDC a legal tender or not? Or maybe it can be taken as on a voluntary basis, but ensure this network effect. Indeed, new money should be trusted, it should be convenient, and again, we have one more challenge here because we all know who is extremely good in providing convenient services and solutions to the customers. Yes, banks and fintechs and central banks. Well, I would say we're only in relation to cash in the value in this direction, only in relation to cash, and have never been working with digital money solutions with the end customers, with the users. New form of money should be secure, low cost, and also for merchants, because typically merchants take these costs of accepting payment methods and deliver a certain level of privacy and many others. Therefore, answering the question, will it beat cash? I would expect that in the beginning it would complement cash for sure, but in the long term, who knows, maybe CBDC will dominate if cash becomes obsolete. And the question is when? When will it happen? And following the ECB, European Central Bank, Governing Council decision in July, we have 2 weeks ago, actually, we have started investigation phase of the Digital Euro project. And the investigation phase will take around 2 years. So it's going to end in 2023, hopefully with a proposal to move towards implementation phase. But well, yeah, this is not guaranteed, and who knows, maybe there will come proposals to prolong investigation phase, or maybe the decision will be not to go. But let's hope that we will join implementation phase in 2-year time, and expect that it will take 3 more years to implement digital euro. So as of today, probably in 5-year times, in 2026, we will have digital euro finally in our wallets. What we as a central bank are going to do, we'll indeed keep general public informed. We will try to interact with the industry, with the general public as much as possible to explain, to also to understand possible negative consequences and to minimize any negative impact. Also for national stakeholders, and consider our previous experience with the introduction of the euro, we're going to set up a national stakeholder group. And also I would expect that we also have a quite detailed plan how to ensure smooth introduction of digital euro in Latvia. I don't have many takeaways for you from today's talk, but the only one, we as a central bank want to deliver you diversity and protect your choice. So you can pay with cash, card, instant payment, or digital euro. Thank you.
Thank you, Deniss, for your presentation on CBDCs and digital euro. Are there any questions from the audience? Okay, the first one.
How many questions can I ask? Okay, first of all is how to contact you. Given I have some insight and would like to discuss some things.
So you can find me on Facebook, on LinkedIn. You can ask Emil's for my contacts because he's in my team, actually. He's a central banker as well.
Okay, then I don't have any more questions. I will ask him.
Okay, any other questions? Anyone? Okay, my question for you is regular cryptocurrencies a threat for the CBDCs?
Well, the question is rather broad. I have already mentioned that the real fear now and what we can call a threat to traditional financial system is, well, initiatives, stablecoin initiatives like Facebook DM, since in their potential coverage and scalability, they bring quite a huge risk to us, to both to central banks and traditional market players. As regards to classical crypto, we can see that, well, it's a quite, I can say that it's already well-established market, functioning and following its own rules. We see that it's more and more becomes mature market for investment. Therefore, we are now working on so-called MiCA, Market and Crypto Assets Regulation, trying to aim to deliver certain level of protection for investors. So we already have reached the stage when we recognize crypto market as market for investments, where we have investors, we have investment assets, and when we try to organize this market to work following, well, framework of the regulated market we have now.
Okay, thank you. Are there any other questions from the audience? No one? Okay, there's a one.
Hello, thank you for your presentation. I was just wondering, I had a very practical question, in fact. So, for example, if I have 10 euro in cash and now there is this digital euro, should I go to some sort of central bank's ATM and then I will have digital euros, I will be able to pay similarly like I can pay with the retail bank, or will it work differently? Thank you.
Thank you. While we can just imagine how the future will look like, I would say that even now, the main flow of money, let's call it in that way, comes to our bank accounts. And if we still have commercial banks in this distribution model, I would expect your commercial bank will keep for you an kind of an account or wallet where you can store digital euros, and it still may be to flow in two directions, but first you will be able to withdraw money from this digital euro wallet to have, well, normal cash, and vice versa, you can upload euros to this digital euro wallet. But currently I would expect the model that splits a bit and allows you to keep separately central bank money, digital euro, and euro commercial bank money on your accounts within the commercial bank.
Okay, thank you. There is one more question from the audience.
Hi, I have a question. So, while we have Bitcoin and other cryptocurrencies, why do we need digital euro? I mean, from national bank point of view, you want to be in control at some point, maybe. But from the customer point of view, the system is already working. It's in place. You can buy stuff. You can exchange. You can do everything. Why do we even need central bank here?
So the main question is about the working system. A couple of years ago, I was on the same stage asking, and I was asked actually about Bitcoin, but I had only a couple of hands from the audience indicating that they use Bitcoin, and they really consider and think that Bitcoin is convenient, mean of payment. So here my answer is that the initial idea of Bitcoin was to become a global mean of payment, but we now see when the greed joined this market and took it over, now it's again the same instrument and subject for speculation, for getting easy money, but it is not working appropriately. And since the Lightning Network has not delivered on the expectation of the promise, I would say you can challenge our initiative, central bank initiatives, with something more impressive, but not with the Bitcoin anymore. So this it is becoming a kind of dinosaur. Still, it made its impact on the whole history. We would not be able to talk today about CBDC without this all crypto history we went through. That's absolutely true, and I share your view partially because cryptos have delivered tokenization of assets. We are very much impressed with the possibility now to tokenize even everything, and now we are building tokenized money to beat cryptos to some extent. That's true. That's absolutely true. But I would say this competitive coexistence will continue, and probably this coexistence will be a bit individual. So central bank digital currency will deliver on its purpose, and cryptos will probably develop as crypto assets.
Okay, thank you. We have another one.
Thank you. Deniss, if in one hand I would have a euro, a physical euro, and the other hand the digital euro, what would be the pricing differences, how the price on the euro is set? Is it like correlation 1-to-1, or the impact is built on market supply-demand plus some regulatory, or at one point the correlation will not be 1, it will be something different?
So currently we are considering only one model, so it's a full parity 1-to-1 without any differences and flexible rates. But who knows? I would expect that during this investigation phase we just get full confidence that this approach is the correct one, and the costs applied to merchants will be covered in different ways. So if you use €1 and transfer €1, one digital euro, it will be still one digital euro.
Okay, thank you. Is there any other question? Yes.
Hi. So what about the mining process as it is with the cryptocurrency? Will you be able to mine euros or do some stuff like that? And as well on the initial coin offerings, will there be any initial coin offering where you can buy, let's say, €1 for 90 cents to get people into that?
Good question, but well, to be honest, not. I don't have yet so detailed description of the possible distribution model. As regards to mining, well, it still very much depends on the distribution model. Is it centralized or decentralized? And here we can see that for e-Kronos, Sweden is now testing DLT. However, for the euro system, we at the first stage we are going to understand and to investigate if we can leverage our existing infrastructures, and this quite naturally it means that we will be going in that particular case, in that scenario we will be going towards centralized distribution model, and then it's absolutely clear that we will not be able to apply classical mining and implement classical mining, what we know from blockchain and DLT infrastructures. As regards to initial distribution with discounts or something like that, again, question is quite complex. You see in China, they just provided a certain amount of money for their pilot. We don't have a pilot yet, therefore let's see how it will happen. I would say it's too early to make any predictions or assumptions here.
Okay, thank you. Any other question? No one? So, okay, my last question for you is, what are the main benefits for the end user of the digital euro, for the regular people?
Well, I would expect that in the audience you are quite many who typically trying to buy something, I don't know, flowers, for instance, or being the RIGA market. You're struggling to pay in cash because you actually don't know if you have cash or quite often you don't have at all. And digital euro aims to reach this part of society who is quite advanced, who wants and is willing to be digital, but still to have an instrument like cash provided by the central bank for payments. And there is no ambition to take over private market with central bank digital currency. Certainly not. The idea is to deliver a complement which fits modern economy, follow all the digitalization tendencies and so on. Though I would just assume that maybe the ambition there will be to reach, I don't know, 10, 20, maybe 30% of the market, but the idea won't be to take it all. That's for sure.
Okay, thank you, Deniss, for your presentation on the evolution of money and the digital euro. And
great talk, thank you.